Well, hello everyone, and welcome back to Disaster Podcaster. It has been a minute. We took the summer off. We are going to start today with the second half of our second season. So this is our season 2.1. This is going to be episode number 11. No guest today. We're going to talk a little bit about, kind of our summer, where we've been, talk about the industry. We finished episode 10 this year and kind of sat after episode 10 and said, I won't say it wasn't fun anymore. It was just, I didn't feel like we were doing anything spectacular. Toby and I like things to be very valuable, very much that people walk away from it and saying, great. We dabbled with some things last year. As you may recognize, last year we did the show live, and we actually took live callers. I love the idea. I love the concept. I had a whole grand picture of how that was going to play out, but it just didn't. And that's just how businesses go. That's how ideas go. That's how plans go. The fact is, we never really got more than a handful of people watching live, because I guess it makes sense. Our audience that would be listening to this podcast, I don't think there's any farmers listening to Disaster Podcast, or they don't want to know, but emergency, services contractors, remediation specialists, restorers, as we call ourselves. Where are we? We're in the field. We might catch a few minutes, but we people are probably listening to the recording of this, either on the podcast for your Spotify, your Apple, Google. There's a lot of different platforms, I've come to find out, that host podcasts, or you're watching the video segment over on YouTube. So however you're consuming it, we came to find out that looking at the analytics and the data, that it just made more sense to do this show as it was intended to be, just as a published podcast video vlog every week on Fridays mornings. And that's where it's at. So we're going to do that. I'll tell you another thing, and this is kind of going to get inside of our head a little bit. And again, I say everything I'm going to talk about, I want this to be resonating with you and how it might relate to your business. It's real easy when you're doing something like what we do here, a podcast, or we write a blog. It's real easy when you don't get feedback for any period of time. When you don't know, you get these voices in your head that nobody's watching, that what you're doing sucks, that nothing is relevant, or something like that. I've been on this restoration, rebel, air advocacy information on the forums. I've been heavily involved for years, and this week I made a post. It was yesterday, so I had a window of time where I didn't have anywhere to go and I had plenty of things to do, and I just made a post. Who needs some help? Here's my phone number. Give me a call. I've got some windshield time. And I got 3 calls, and 2 of them I was able to reconnect with. But one, Jeff, big shout out to Jeff Tyler. We had a great phone call, dealing with some things in his business, no different than the rest of us. I hope that a few cues I had may have sparked some inspiration, but it was real funny. I answered. He's like, a long-time listener, first-time caller. And I'm always reminded that if you're doing something, even if it's only one person, it's worth it. And what I mean, and Toby and I were kind of talking to some other podcasters that said, if you only have 100 people, think about how powerful that would be, that if those 100 people were in front of you in a room, that they would be all that matters. So kind of taking a different approach to our podcast. So we're going to bring on some people that you just don't know, but they're going to have really, really awesome stories. And I think that's going to resonate with people. We're going to have some themed episodes, but for this one, we're just going to kind of recap. I'd like to know how everybody's summer was. I would love a comment wherever you're consuming this. I had a great one after we took our pause, and we always knew we were going to. I think we had talked about August that we were going to start back up. But it ended up being September just because of some logistics. A new set, stripped it down. We changed the format of our podcast. We got rid of the the intro music and all the bells and whistles. It's just going to be this. I'm wanting the content and the conversation to be what holds us on. So I don't want to drag this out any longer, but I hope that you had a great summer. We're going to talk a little bit about the State of the Union for our industry, and it's probably going to have a lot to do with that. But I really do hope that you took some time, took a vacation, took some time off, barbecued, whatever it was. My family and I, we just made a choice to have a vacation of a lifetime, and we went to Maui. I'd never been to Maui. I've been to Hawaii several times, but never to Maui. And we had I don't know how people could not live there. It's amazing, but it's very expensive. So we did that, and I had a great summer. Toured, went and saw a lot of customers, toured around the country a little bit, like I always do. Took the time that we were down to go see some new clients, some old clients that have been, it's been a while since we saw each other. Toby and I went to a conference or two, and one of them we went to REIT's Next Level in Atlanta. It was fantastic. It was a 2-day event, and it's how I think events should be. Not a ton of vendors, but really all about the content where you walk away with some actionable things where you get to work in your business the following week, and we both have. And so kudos to REITs for continuing to do good stuff there. I've been to some classes, sharpening up and learning more about T&M Pro so I can continue to educate this industry about time and materials billing on all jobs, including residential. So anyway, before we get started with the bigger podcast, I just wanted to once again thank our sponsor. Got to pay the bills. Our sponsorship helps us with a little bit of our equipment, some of the apps and the technology, a little bit of the build out. It's not big, but it's promise you I don't take on sponsors lightly. And this is one that I really believe in, the person and the product, which is Kahi, Kahi.io. The link's on the screen. Kahi is a really, really cool and really forward thinking with some learning into it, asset and vehicle tracking devices. So our equipment that we've made such an investment into, our, your air movers, your dehumidifiers, air scrubbers, vehicles. They have forward-facing cameras. There's some really technology in there where you can clock in and clock out for different jobs through facial recognition. But really just track the really, really great, expensive tools that we buy that cost us so much to sit back. So Kahi has been a sponsor since last year. A great thing. They're really integrating with a lot of people and some of the software to kind of make that bridge where it's already in your workflow. You're in one app. They do have their own app. It's really great. But nobody can explain it better than they can. They're actually doing a lot of demos. A lot of people we know are switching their stuff to Kahi. And I think the biggest reason is it's mostly passive. Once installed, there's nothing really much that your technicians need to do. They can focus on doing what they're supposed to be doing, which is the remediation project and the restoration, the drying, or watching anything else, or taking care of the customer. And this is all kind of happening passively, I like to call it. So reach out to Kahi.io on the screen. Kevin, the owner, Kevin Dooley, awesome guy, has given us a coupon code. It's being announced now for the first time. If you contact them and use the word podcast, he's going to give you 10% off the hardware purchase to put on your assets. That's a great deal. Thank you, Kevin. Thank you, Kahi. And make sure you go check them out because they're really, really doing some cool stuff. And if you ever ask yourself, when is it time for me to start tracking my equipment, lose some of your equipment to either employees or whatever and count up how many dollars that is and how much that equipment makes you, and you'll know real quick what the ROI is on having some tracking. And I've had tracking for years, and I'm really liking what Kevin's doing. So anyway, I want to talk about the state of our industry real quick. We made a post and a blog last week. This is the time of this recording was in September of 2022, and I was boarding an airplane, and I, for many, many years, have been trying to just always working on a good way to express the relationship between an insured policyholder, the insurance company or a carrier, as we'll call them, and a contractor. There's a triangle there of connection. Very seldom does a contractor work directly with a carrier. Very, very little bit, unless you're a consultant hired directly for them. Your contract's with the insured. So I made this post and kind of I addressed it like for anyone not in our business. I wanted to explain how the pressure and the culture is, and anyone that's in this business knows what I'm talking about. And I may look. I'm only going to look over here and look at and read it for a little bit, but I just said, if I'm at a barbecue in my backyard and I've got a group of friends and they're like, hey, what's up with your business, your industry? I said, it's a great industry. We actually get to help people in a dire time of need with some specialty skills that we have learned and continue to learn, that people wouldn't know how to remediate their own mold. If there is a flood water outside, we see it all the time in storms. People don't know that flood water is category 3, and they don't inherently understand that it's dangerous. It's bacteria, it's viral, there's contaminants that could make someone significantly sick. You have fires in your house. How do you clean that up? It's not just a maid that comes over and wipes that stuff down. It's got to be taken care of the right way. And then, of course, there's the reconstruction. So we're in this great industry that a homeowner or business owner, an insured, if you want to call them that. I don't like calling our customers insured because that labels them as their only value to us is because they have insurance. I actually have always contracted with the person as an individual. How they pay us is up to them. Fortunately, they have an insurance company that they paid premiums to, and this is how insurance works. They pay a premium every single month with this inherent thought, with the abstract knowledge and a promise, which is the policy, that when and if something happens to the property that's insured, whether it's me, personal property, my car or my home or my business or my Rolex watch, whatever, that when something happens to it, this policy will repair or replace, depends on the policy, all the same way. You'll have some financial obligation through a deductible, they call that, right? But otherwise, you should get a new watch or replace the one you've got or repair it. You can get your car repaired. You can go to the doctor and get yourself repaired, hopefully not replaced. Same thing in your home. This is a general belief. 98% of homeowners aren't having floods or fires at their houses very often, if at all. So when the time comes, there's this automatic belief that their insurance company is going to do exactly what they promised. After all, they're going to treat you like a good neighbor. You're in good hands. All of this commercials that you see, all of the Super Bowl commercials and the stadiums, and it all says you're in good hands, your family is safe with us. And some of them are that way. But let me tell you what happens. And this is where I made this post on all across the channel, Facebook, my LinkedIn page. We made a blog out of it. A contractor is called, let's just say my company. They call my company, hey, Klark, you're ABC Restoration. I have a flood. I saw you're great. My neighbor used you. Betsy from the tennis club can't quit praising how much you helped them when they had a fire. Whatever that is. Hopefully you're getting those kind of referrals. I go in and I put together a scope of work. This is what needs to happen based on my experience. And it's going to be pretty good. Because I know what needs to be done. But I have my own rates for my company. I charge this for that, and they're going to be different than everybody else because of, pick a reason, size of the company, how much training that I put into my staff and my company, how good my insurance is, do I have better vehicles, better equipment, do I spend more on customer onboarding, whatever it is. My prices are going to be different, but I'm going to sell that value to the customer. The customer is going to have an insurance company. And I'm going to shorten this down a little bit. Insurance company is going to probably not even show up until after I've completed this job. I'm there at 2 a.m. to start the emergency services. Maybe we board up the windows, we extract the carpet, we make it safe. We start this drying or this cleaning process to take things from a bad place to a better place. And we're doing our job. We're fulfilling our promise. We have a contract, and I hope you guys are using contracts, not work authorizations. Hear me again. A contract is a binding document that has a lot of components on there, including the price that you're going to give the customer for your services. It can be done. It is done every single day in this industry. Work authorization is just an open. But I've made an agreement with the customer. I'm going to want to get my rates agreed upon. The customer is going to initial or sign my contract that says ABC Restoration, Klark Brown Restoration charges this. Okay, all fair, right? Customer's like, okay. They call their insurance company to file a claim if they haven't already. Insurance companies have what's called a vendor program or a MRP, Managed Repair Program. And these are a list, not uncommon for medical or anybody, of approved, what they've called approved, preferred, they prefer them, contractors that meet their guidelines, whatever those might be, certification, insurance percentage, insurance levels or whatever. But to be on their list, they're going to agree to a rate sheet, the insurance company, what they want to pay. Years ago, those rates were good. 8 years ago, 10, 12. I know a lot of great businesses that built mega companies based off of this program. As time is going on, like everything else, like we don't go to Blockbuster anymore, we don't use VHS or DVD, we don't use payphones. Things change, times have changed. Inflation kicked in. Those rates did not change, and you're finding more and more and more companies that can't make a living off that. Well, I'm jumping all around. I'm going to finish my work. I'm going to finish the job. The house is going to be dry to the standard. It's going to be clean. It's going to be ready for maybe some reconstruction. My company might do that. There are a lot of companies out there that do all of it. Some do only the mitigation, but they may have a partner or a referral for someone that they think does good work. An adjuster for the insurance company still hasn't come out yet, but they're going to call and try to push these preferred vendors. And this happens. There's no sugarcoating this. This is how this sounds from a claims department. I am Mrs. Jones, so I've had pick any insurance company for 13 years, paid my premiums on time. I call and say, I've had a water damage. I've got an incredibly highly rated, strongly reviewed online, great reputation. Many people in the community have used them. They do good work. Christian people, whatever it is, I like them, and they hear and they did the mitigation. Insurance companies, ma'am, we're going to need to send out somebody from our list. But I've already got someone here. Yeah, but they're not on our preferred vendor list. Well, can we get them on your preferred vendor list? No, it's a whole list of things that have to be done, and it has to be done before now. And the customer's like, but they're doing a great job. Why would I kick them off? Well, because they aren't agreeing to our rates. A smart homeowner at that point should ask the question, why does the insurance company get to decide what they owe on the promise that they would reimburse it? I mean, and I'll tell you later, my price from a preferred vendor are vastly different. I can't do the good work I need to do for the insurance rates. That's just all there is to it. So this happens. Mrs. Homeowner is absolutely allowed to choose whoever she wants. And when she or he, the homeowner, knows and pushes back against their insurance carrier and says, can I use anybody I want? Are you telling me I have to use your preferred vendor? Well, no. But if you use your own person, we may not pay their bill in full. We may only pay what one of our preferred vendors would charge. Wow. Now I'm going to tell you to pump the brakes, because this gets into a really weird area. Again, as contractors, we know that the average homeowner is believing and trusting. There's a built-in trust here that has never been breached until this point. Now what we've got is a price fixing. Now we've got an insurance company trying to profit on all sides of the claim and saying, I want to control that. Let me give a little tidbit information to anyone listening to this that doesn't know. If the insurance company is claiming that they get to select the rates and pick what they are, I'm going to beg you to ask the customer to look in, and not you, it's not your place. That person needs to look at their policy. If it's not written in that policy that this is an exclusion, I don't do this or I don't do that. If it's not previously agreed upon in their contract, which the policy is, then their claims department is making this up. And they do make a lot of things up. So do contractors. I am not saying all contractors are honest. It happens on all sides. But it goes on and on and on. I know I'm getting long, but this post was, then let's say we do this work. Well, as a contractor, I'm usually not seeing a lot of contractors aren't making the homeowners pay their invoice, because that invoice could be $3,000, $6,000, $8,000, $9,000, $13,000. And we did the work. We have an invoice and we want to hand that to the customer and say, here's the invoice, we need to get paid, which your contract should have terms in there. Most of your customers are saying, well, I don't have $8,000, $10,000. I would have liked to have known that in the beginning. Yes, you may agree with that. I would have liked to know before that I was now doing work without a guarantee of getting paid from the person that said they would pay me. Homeowner assumes that, well, that's what my insurance is for. You know, you're right. The insurance is supposed to reimburse the homeowner to pay us. Reimbursement usually, by definition, will mean the customer has incurred a cost. They have actually paid someone for something, and they turn in an invoice to get reimbursed. What we're doing is we are becoming the bank. Restoration contractors, all in this industry, will carry this note. We'll say, oh, we'll tell you what, we'll hold on to it till the insurance company pays us or you. You can get a document signed that the insurance will send it's called a direct pay authorization. I'm getting into a lot of I talk about this all the time. We coach clients with this. We've been saying this for years. The insurance company doesn't owe the contractor a penny, not a penny, right? Let me say that again. The insurance company owes the contractor nothing. The homeowner, the business owner, the person who you did the work for does. They are supposed to pay you. If you or anyone in your staff is spending your day calling Allstate, State Farm, USA every day asking, hey, where's our check? When's it going to be here? You're probably getting, number one, a runaround. Number two, no answer at all. Or the doom and gloom of, well, we've got your invoice right here and we'd like to talk to you about some of these line items that you're charging for. These aren't things that we're comfortable paying, and our insurance company does not cover that and pay that. Now you're getting into what they will and won't promise to pay the insured, not you. You see what I'm saying? So I'm just going to tell you, trade across, don't let that happen. Don't have conversation. Don't call the insurance company asking where your check is. Call your customer and ask, has your insurance company sent you the money to pay my invoice? Well, no, they haven't. Have you called that insurance company? No, I actually haven't. Well, why not? Well, I thought you were dealing with it. At this point, you need to ask yourself, did we onboard that customer to let them believe that we would be negotiating with their insurance company or calling and trying to collect from them? You should not be doing that. You're actually stepping over a line of UPPA. I've talked about that many, many times, unlawful practice of public adjusting. You're actually acting as representation for that customer. You're not your customer's representation in their claim. You're not a claim specialist. We are contractors. That's our specialty. The customers, while it's true, they're not armed and ready for what's about to happen with their insurance company trying to keep big profits. I post all the time of the reported profits in the billions a year of what they make in profits and revenue. It's insane. I don't think any restoration company except for some of the largest are in the B's, and they're not in profit. That's just revenue. So now we've got this whole bad soup spaghetti that you've allowed the customer to think that they were off the hook until the insurance company's paid. Now the insurance company could easily say, well, we took the pictures from the job and the sketch and the notes and sent that to some third-party company that you never have heard of across the country, and we use them all the time, wink, 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 and they said they would do this job for half of what that cost. Your contractor that you hired, Mrs. Jones, that your community seems to love, is gouging you. Oh my goodness, they are such awful people. They're charging me more. Now I'm going to have to pay half this invoice out of my own pocket because they're charging too much. Well, if you didn't contract and tell your customer up front, that is going to become a surprise. But if you did the right thing and put a number on the estimate before you started and then kept up with change orders as the job changed and it grew or shrunk and got those signed, you have now followed best practices in any project management, in construction or any trade. You have done what 98% of the industry has done. I'm talking about all this not to chastise our industry, but to let everybody know that what used to work is not working anymore. Now, if you are happy waiting 90 days to be paid or 120, and then when that time comes, the insurance company will call you. They don't usually call the homeowner. They usually call you. We're not paying this, not paying that. We're going to take that off. At this point, you're looking at payroll, which is due on Thursday of this week, and all the receivables, all the collections that you've got out equally, 60 days, 90 days. And you're like, wow, I could really use that check. Even if it's a little, even if they take $1,000 off, you know what? You tell somebody in your office, tell them we'll do that, re-invoice them, do that. Great. Is $1,000 going to sink your company? No. If you do it all the time, yeah, because you're already needing it. Now, if you are charging what you were supposed to be charging, making your homeowner responsible for that and getting paid in a quicker time, and your profits were well enough, you wouldn't be close to making payroll. You would actually have enough in a profit account to float your business. A lot of companies float. I would have 30-day net terms. After that, late fees, liens, and whatever. So anyway, I made this post. It was reshared I don't know how many times. Didn't expect it to go that way, but I found a good way. We're going to put it in the description. I want you to read it. Lots of commentary, lots of people with opinions about what we could do. It's great. If you want to go to Restoration Nation on Facebook, you can find that post. A lot of good input, a lot of good feedback, and a lot of people just said, you nailed it. You described it exactly in a way that a 10th grader could understand. Now, I'm hoping that contractors will take that narrative and use that as an onboarding program with their customer and kind of give them a glimpse, a crystal ball, if you will, of things that could occur throughout this project just because of the landscape of insurance and how their processes work, and how your company will not deviate away from what you're doing, only because you have set your rates to right where they need to be, not where they, oh man, we're going to hit a home run. You're making a good profit, which is, you're the only person that should be. Contractor is the only person that is really scheduled to be making a profit off of a claim, because you're putting out money in labor, materials, your overhead. Insurance has already made a promise, and they've got a premium they've collected. By the way, they make money in the stock market with that premium. They're investing that, a la while they're waiting, you wait 90 days. They keep reinvesting every month and get returns. So they're building your 10,000 could turn into 12 or 13, right? Getting the picture? This is all classic from a book called Delay to Not Offend, something that I've talked about a lot of times. So that post really ignited a lot of conversation. It was good to see the clarity for some people, and a lot of people tagged. I could see it. There were people who were tagging their boss, their coworkers, their partners, saying, "I've been telling you this was going on." I could almost hear the coffee table, the coffee room conversations like, this is not working. This is blah, blah, blah. It's got to be a better way. there is a better way. And follow our podcast. Go back and check. You've heard we talk a lot about this stuff because I really want everybody to get paid here. If you want to dive deeper, reach out to us at Restoration Advisors. So that was that post. I did get some criticism that it was all negative, and a lot of people said, great, you've told us what we already know. That's the problem. What's the solution? So I will say I've talked about the solution for years. I don't think most people want to hear it. And look at this word, courage. Most people don't have the courage or the understanding of how to be both the hero to your customer and still be expecting to get paid. Somehow, when we go in with the cape on and be the hero, we assume all of their weight, and that's where we are hurting our businesses. So we made a blog using the entire post that I made, that dialogue, and added some action events. A link to that's going to be down below, so you can take a look at that. We did switch and took action like people wanted. So before we change gears, I want to give you one last, I'm going to read directly from an email that came from that blog, okay? We did that blog, and that evening I got an email from a gentleman, keep his name out of it, but I promise you this is a real person. I know who this is. Just got off the phone with the homeowner out of a mitigation job I did last week. Well, about 10 to 12 days ago, he said Snake Farm adjuster showed up today with a copy of my MIT invoice, my mitigation invoice, with a pen, crossed out many line items, writing excessive. Wrote the word excessive like you were being graded in school, like by some nun at your school. MIT invoice was $9,800, and reconstruction was $15,600. Okay, so we're talking about, I'm going to do some quick math there, $25,400. $25,400 was a total bundle package. Homeowner already had the invoices. He hands the homeowner, State Farm, I guess wrote a check, had authority to write a check, hands homeowner a check for $13,000 and some change. $2,200 deductible, depreciation, saying the total claim was about $16,000. He knocked $10,000 off of this and paid that customer and said that's all we're paying. That customer should hire an attorney. They should get their agent involved. But now this very great contractor has to go back and now defend himself against what their insurance company did to them without any real, nothing in the policy says we get to name the price. It says fair and reasonable. I want to talk about what's fair and what's reasonable. If I charge every customer in my market the same price and the cost of my good, I don't have to show what it costs me, but everyone knows. But to do the right work, it's between me and the customer, nobody else. I tell people all the time, if you watch Shark Tank, Kevin O'Leary, Mr. Wonderful, if your company doesn't make profits and you say, what's your profits? We're like 5%. He's not investing in you. He's not stroking a check for $300,000 for 10% of your company. But if you say I've got margins of 140%, he's like, his little greedy, beady eye gets really, really excited and says, I like those numbers. Profit is not wrong. It's your choice. It's America. You run your own company. If your customer thinks that you don't deliver, then that's a conversation you're going to have with them. You're going to say, I'm not paying you what you're charging because you didn't do the things that you outlined in your contract. Enough of that. This email came that night. I thought that was really timely. I see this every day. Toby here works with me, sees it, hears it with our coaching clients. Everyone's asking, how do we get through this? How do we get past it? I wish I had that answer. I don't. Read that blog. We make some recommendations. I have an association, or a bunch of us have an association called the Alliance of Independent Restorers. As an industry, we're very fragmented. We're all asking the question about what do we do, but we're not asking it together. We're asking it separately. If we were together and we were to put some real initiatives together to show the public what's happening with their insurance company and being cheated, I think we'd see some changes. but I'm also agreeing that they probably would just change to something else. It's a big enterprise. Sorry, drinking coffee. Okay, so read the post, read that. That's the state of where we're in with this industry. I'll tell you now, what should we do, Clark? If I'm right, and I think I am, because I have results that prove it. That's all I have to go by. I'm not above learning something new, but if I have a mitigation company, which I did, and I do now, if I have a mitigation company, I'm not using the Xactimate, period. Recon makes sense. Customize your price. Don't use a downloaded price. I've talked about that ad nauseum. You are not required, and no one can make you use those prices. It's against the user terms and conditions to use that software. If adjuster's trying to make you use that price, and you're not on the program, their credibility is in the toilet for me. They're trying to coerce and bully and mafia people. It's like Tony DeGuido. He's coming to take you out, cut your head off, and get the cannoli, right? Don't believe it. It's a myth. It's Lord of the Rings, Harry Potter, Marvel, Disney. It's all bullshit, okay? Your price, your business, know your numbers, price your jobs the right way. I like T&M, time and materials. Super simple, super transparent, and yes, it can be done and is done today by many people for especially commercial, but even residential. It has this application there. It's straightforward, it's transparent. Your lead techs can do it, so there's nobody, you're the owner, project managers aren't sitting up spending all these delicate hours putting together a number for a job that you already did. Every other service company prices a job, does the work, gets paid. Our industry will go there. And a lot of people have. And you know what they all say? God, why did we do this before? I don't know. So get away from that. Start using contracts. Contract the right way. No work authorizations. Get a contract. Get a dollar amount. Get an agreement. Gets rid of all the, I'm not paying that or whatever. Okay? Secondly, try to get the customer to pay. Or third, try to use third-party financing. We use it all the time in our company. Customer can pay the bill on their credit card and get reimbursed. You and I both know how easy it is for them to get reimbursed if they've already paid. The insurance company doesn't have an argument to call and try to negotiate with anybody when the customer has incurred a debt, a financial burden. I would do that. I would onboard the customer well, and then just overdo it with service. Overwhelm your customer with great service, like the service that we're not getting currently. We're going to talk about this at the end of this, but the pitiful arena of service that we're getting from restaurants and service providers. I was at Lowe's last week, and I had Avis. I'm an Avis preferred. I never have a problem with Avis. The way an employee talked to me last week, I literally am questioning whether I'll ever let them have another dime of my money. I just don't support companies that let that happen. But I do know that not all managers and owners are looking for people, and they don't see everything they do. But I promise you, if someone's treating you badly, they do it to a lot of people, and that's not the first time. So don't let those people, onboard your customer, but you got to have good profits. You've got to be healthy and strong so that you can pay the right people. The right people are working for more money that won't do stuff like that. The ones we're hiring, they're taking the less than 20 usually, and that's what you're getting. Anyway, and that leads me into the last topic in this state of this industry is probably I don't know which one is worse, the heaviness, probably the heaviness of the insurance in the hand of that fight right now, the fight that every job it's literally just that's a fight, or if it's the staffing. But I think it depends on the day. I know hundreds of contractors that just say, I'm losing hundreds of thousands, and a few of them millions in potential revenue. I got the work coming in, but I don't have the staff to do it. Nobody will show up for an interview. The ones I've got walking around with beats on their ear, it's whatever it is on their phone on the job sites, or Not even at the job site. Somebody called me yesterday and said, hey, we tracked our vehicle and our employees are at home for 2 hours during the day, middle of the day. I'm like, well, you hired the wrong people. And that's what you've got to tell yourself, extreme ownership. If you hire people that will sneak out and go home in the middle of the day, once you know, you can't unknow that. They can't work there anymore. There's no reason for somebody to go in the middle of the day when they're on the clock. Now, if there's nothing to do, come back to the shop, clean up the equipment, clock out, have a great day. Let's do it again tomorrow. But anyway, listen, we all know all this stuff. I don't like to sit here and just rant. I listened to my first real podcast this summer. I'd like everyone to know kind of what got my I'm going to try to redo how I do the podcast. And I'd never listened to another podcast other than, our industry friends, Michelle Blevins with CNR, Jarrett. A little bit I've listened to the great guys, Chris and Brandon over at Floodlight, and a couple of others. But I listened to a podcast outside of our industry one day while I was mowing. By the way, 4 hours is what it takes me to mow my big yard. And I listened to Time Suck by Dan Cummins. Check it out. It's really great. Nothing related to our industry. I usually listen to audibles. But I listened to a podcast, and I'm like, that's what a podcast sounds like. And I liked it. And now his are long. His are 2.5 hours. And I listened for 2.5 hours. So it got me thinking, I got to do a better job on my podcast. Well, how am I going to do that? I'm doing the best I can. If you can give me feedback and go to our website and through YouTube or through your whatever channel you're watching this, let us know. Our goal is to do a good job. We talk about a lot of things that come up a lot. I do have some great, very specific topics that are coming up in the next few episodes. But if you've got something you want to talk about, and again, just because I'm not doing a live show with Collins, I can take a phone call. If you tell me, hey, next week let's do a podcast and I'd like to call in and talk about what so-and-so, this or that, or whatever, or what I'm doing is working well, we can make that happen. It will come across this podcast and everybody will get to benefit from it. We can absolutely do that. But we really want to make, I want to have fun. If this isn't fun and we're not getting something from it and we don't feel like the public is, it's not going to last too long. So you're going to hear from us. We're going to have some fun with it. Last year we used to like the music. We liked the whole intro music. But the way it all works now, people say they want to get right to the point. They don't want all the jazz and the bells and whistles. So we're doing a stripped-down version of a disaster podcaster. I'm not spending the whole time selling services. People can reach out. They want to know some answers. We're going to do that. Listen, I'm not going to ignore the fact that we help people with some of these, hopefully. Staffing, I don't have an answer right now. I will tell you, market towards staffing like you do towards getting work. Make yourself, your company, attractive. Would you work for you? Could you live off $20 an hour? You need people that have dreams and goals and aspirations because those are going to be your future managers. Relook at how you do that. So we just, as an industry, as peers, we need to change how we do our business. We need to keep the parts that make us great, but scrap the ones that aren't working. It's just natural. You need to evolve. You need to adapt. We can't continue to do the same thing over and over with the same results. It's every entrepreneur I know, including myself. I default back to what I'm comfortable with. You need people around you that won't let you do that. You need systems in place to make others accountable, and you need to delegate. I want you to take your trip to Maui. My heart hurts reading from Restoration Nation, and we ask, hey, what do you do for fun to shut down and unwind? And more times than not, most people say they don't. It's not good. I'm going to be 50 this year, and I've started taking a little more time off. It means that I'm going to have a smaller business. I can't go 100 all the time. You'll blow the engine. I've talked enough. That's our Disaster Podcaster, episode 11.
Hey, y'all. This is Christina. Thanks for wasting an hour with me listening to the Disaster Podcast.